2023, as I mentioned just now, the range have been narrowed. Okay, check previous contemporaneous transfer pricing documentation fulfilled with the new requirement. So the other one will be you get to ensure consistency between contractual risk allocation as well as the actual risk allocations and entity characterization risk assumed by the entity. So you need to revisit the pricing policy, ensure it clearly articulated with relevant supporting document. So my next slide will be on the update on Malaysia perspective for global minimum tax. As I mentioned, as Becky had mentioned just now, basically this is initiative to reduce for base erosion and profit shifting. The scope in Malaysia in terms of the new global minimum effective rate of at 15%. Adaptation will be the similar. It will be top-up tax will be charged when the group effective tax rate is in a jurisdiction fall below the 15% level. Threshold will be with M&E multinational enterprise with annual consolidated revenue of euro 750 million. So for Malaysia perspective here, adoption of income inclusion rules for qualified domestic minimum top-up tax, and from fiscal year beginning on and after 1st January 2025. So at the moment for the under tax profits of payment rule, there is no clear positions. Okay, this is the timeline for GMT in Malaysia. As you can see here, effective date will be 1st January 2025. For M&E Group, we are consolidated financial statement period begin or after 1st January 2025. Closing date will be for first M&E Group's consolidated financial statements for the year 2025 for a complete 12-month financial period beginning from 1st January 2025. So for in terms of submission of the top-up tax return, the information of the group return and the payment of top-up tax return will be by 30th June 2027. So in January 2028, the tax authority is looking at risk assessment and audit review process for those entities that is affected. So impact of GMT in Malaysia. Companies in Malaysia who enjoy tax incentive that is below 15%, a top-up could be imposed. It will lead to less attractive for FDI, foreign direct investment into Malaysia. So with that, the government is looking at introducing new non-tax incentive, for example, like the credit cukai pelaburan strategy. The detail is yet to be announced. So essentially, what is a credit cukai pelaburan strategy is essentially a tax credit that is creditable against the tax liability. So you will have a less negative impact in terms of the global effective tax rate. Okay, with that, I will end my sessions and I will hand over to the next speaker, Mr. Sahil from PKF Singapore. Thank you.
Yeah. Thank you, Becky, and thank you, Ai Chen. Okay, so thank you everyone once again, for joining this webinar. So I wouldn't be, taking much of time because, we would like to have more of discussions on the Q&A part. But my objective at this moment would be to give you all a brief, overview of what is happening in the Singapore transfer pricing landscape, and exactly, what are the main key requirements for taxpayers. So primarily for Singapore transfer pricing landscape, the compliance is divided into a full-fledged documentation and a simplified documentation. Both are known as local files. For companies or Singapore taxpayers, who are having a gross revenue of 10 million Sing dollars or more, Singapore dollars, uh, and having transactions related to sale purchases exceeding 15 million, or provision or receipt of services exceeding 1 million, they need to prepare a transfer pricing documentation in order to comply with the compliance requirements. This threshold of 1 million for services transactions will be revised to 2 million effective from financial year 2025. So this is for companies who are exceeding the 10 million Sing dollars. For companies who are not exceeding the threshold of 10 million Sing dollars, they still need to prepare a simplified documentation, right? And the deadlines for both the full version of the simplified version is on or before the income tax return due date. Something similar to what we just discussed, in the earlier discussions. But the bottom line and the bottom objective is that whether it's a company having more than 10 million or less than 10 million, you need to prepare a transfer pricing report to ensure compliance with the local regulations. So that is something which is absolutely of paramount importance for any taxpayer having related party transactions, whether domestic or whether cross-border. So the requirements apply for both domestic and cross-border, subject to certain exemptions. Uh, Apart from these two requirements, there's an additional reporting requirement for companies whose aggregated value of transactions is exceeding 15 million Singapore dollars. So they also have to prepare a related party transactions form, which has to be filed and submitted with the corporate income tax return by the due date. So this is something an additional compliance requirement for companies having this threshold. Now, coming to the next slide. So we have, in this case, the requirement that country by country reporting requirements is that the companies or groups who are having, an ultimate parent entity having Singapore headquarters, and who are also having, the consolidated group revenue of Singapore dollars $1,125 million in the preceding financial year, they need to prepare and file a country by country report. The three conditions are: the taxpayer is the ultimate parent entity, the group revenue, as I mentioned, is exceeding $1,125 million, which is similar to Euro 750 million, and the group has subsidiaries in at least one foreign jurisdiction. Why this is important? Because of the interplay with the global minimum tax, which I'll be just discussing in a bit, and the application of the minimum tax of 15% will have an absolute interplay with the country by country reporting requirements, because across most of the countries, uh, the requirements or the thresholds for CBCR or country by country report and global minimum taxes Euro 750 million. Some of the emerging TP issues or transfer pricing issues which we are seeing in the Singapore landscape are increased scrutiny on the audits and enhanced focus on meeting compliance requirements. So this is the most important issue which we are seeing, that all the local files or all the compliance requirements and documentation have been met. Apart from that, similar to what we just discussed, there is a lot of emphasis on financial transactions, especially intercompany loans, uh, corporate guarantees, cash pooling arrangements. One of the most significant what we are seeing is related to government assistance, application of arm's length prices to government assistance, which is in the form of grants or any kind of assistance given by the government. How to compute that in your arm's length price or your intercompany pricing policy. Then also some of the important landscape which we are seeing is related to the arm's length prices for commodity marketing and trading activities. This is something related to the BEPS 2.0 in Pillar 1, which is related to determination of arm's length prices for baseline marketing and distribution entities. This is related to Pillar 1. So global, the BEPS 2.0 has Pillar 1 and Pillar 2. So Pillar 2 is all minimum tax, and Pillar 1 has different aspects. One of them is related to a baseline arm's length range for companies into marketing and distribution. So that is something related here also, which we are seeing. Uh, Apart from these issues, what we are seeing is also related to remuneration for intangibles, royalties, trademarks, brands, strict pass-through cost treatments, which is primarily while computing your overall total company cost base, There are certain costs which are not value adding or which are simply pass through costs. So how to treat them? And uh, one important development which we are seeing is related to GST or the indirect tax and its interplay with transfer pricing adjustments. So this is also something which was quite important, especially for cases involving sale and purchase of goods. So you can see now the conventional issues have now shifted to much more specific issues related to financing arrangements, intangibles, government assistance, GST, and transfer pricing adjustments. So these are some of the most important and emerging issues which the taxpayers have to be fully aware of. And what are the possible dispute prevention and resolution mechanism for such kind of issues? Again, first of all, what we have been stressing from the start of this webinar is that the maintenance of a proper documentation, both at the local and the group level, is extremely important. Uh, there is a new concept known as undertaking value chain alignment. That is something uh, related to undertaking a value chain analysis of the group entities, all the group entities, and understanding which entity is performing what activity and what is the pricing policy. APAs and maps, advanced pricing agreements, and mutual agreement procedures. These are something related to resolving your disputes, and which we have seen in the past decade are witnessing a very important development. Uh, a new concept which is emerging is compliance with the benefit test rule, which is basically maintenance of proper documents and other necessary supporting analysis to show that you have received some services from your related parties, generally in the case of intra-group services or management services, and the others are no consistency of ensuring arm's length prices across all group entities. So these are some of the possible strategies. Of course, everyone is dependent upon the facts and the circumstances, but mostly what we are seeing are these kind of possible scenarios in which the taxpayer can achieve proper certainty. Why all these are relevant is because of this uh, slide which I wanted to discuss with all of you. Similar to what we have just discussed for Malaysia and Australia, the global minimum tax in Singapore would also be coming into place from January 2025. So we are just around about 1.5 months left. Uh, there will be a domestic top-up tax. Again, the thresholds remain the same, euro 750 millions. It will be applicable for companies or groups that are operating in Singapore. And there will be another minimum multinational enterprise top-up tax applies to groups who are operating outside Singapore. So the rules are more or less similar to each other, but the most important point here is that all these are related to the emerging TP issues which we have seen just now. And the objective is to ensure the group has a proper analysis in place and ensure compliance requirements, because the minimum tax rules will be impacting the tax rules and transfer pricing rules for all member countries. So whether it's in Asia, America, or whatever, the rules will undergo a strategic change depending upon the year in which they are getting implemented. So it's better and a proactive basis that the companies and groups are fully ready with this minimum tax and their transfer pricing policies. Uh, so this is the one of the, I would say the second last, or I would say the last slide which I wanted to discuss with all of you is that we have discussed about Malaysia, Australia, Singapore, but what are the emerging issues across this region, because this region of the Asia Pacific is homogeneous at the same time heterogeneous. There are certain issues which are common, certain issues which are quite specific. Like for example, Malaysia, they only need local comparability analysis. So this is some kind of differentiating factors which are there. But most of the common issues which we are seeing are completeness of the local transfer pricing documentation. So I wouldn't lay much emphasis, because this is something the most important issue. Again, increased regulatory scrutiny and audits. More taxpayers are definitely now opting for bilateral and multilateral. Bilateral would be between two tax authorities, your local country and the other related party country, and multilateral would be different tax authorities of different related parties. These are the most important strategies which can be used. Again, the again common issues are increased focus on e-commerce transactions, which is gaining a lot of emphasis and importance. Permanent establishments, intercompany financing, you know, intangibles. So these are some emerging issues which we are seeing, and there are plenty of rulings, some of which our colleague from Australia had shown to you.